Hey, welcome everyone. My name is Weston Zimmerman, and I want to welcome you to this video where we're going to be talking about building a company budget. Over the years, as a landscape and hardscape contractor, we were super passionate about this subject of knowing your numbers and making sure that we're recovering overhead correctly and generating a healthy profit. And so we built this basic budgeting calculator on the Synced Up website to help you be able to build a company budget for free and get you started to ensure that you're not losing money on your proposals. So the whole purpose of budgeting is to make sure that we're not guessing at our markups, make sure we're marking up the correct rate to recover our overhead and generate a healthy profit. It also helps us learn exactly what we should be charging per man hour. It helps us experiment, like, hey, I can like dream of what I want my business to be, and I can build my budget as if my business were that already. So if I want to buy that new machine, or if I want to hire that extra staff, I can plug that into my budget, and the budgeting tool will ensure that I am charging the correct prices to pay for those expenses. Um, and it just ensures that we got a realistic sales goal, realistic expenses to make sure that we're not setting ourselves up for failure in the upcoming season. So, common mistakes that you make as a business owner when you don't go through this exercise is a lot of people find themselves charging the wrong price per man hour. They find themselves charging the wrong markup rates when they're figuring out a price for a proposal for a client, which kind of means that you're defaulting to guesstimating. And a lot of contractors do that. And you can do that for so long, but eventually it'll catch up to you. And the idea here is to put the work in now to prevent those pitfalls and to make sure that we're planning, putting the work in to make sure that we're going to be successful and generate the profit to be a healthy company, which will enable you to live the life that you want for your family. It'll enable you to pay your employees better and keep long-term employees around. And another key factor that I kind of feel is overlooked sometimes, it also helps you provide that A+ 5-star service to your customers. If you don't have the money to give that A+ 5-star service, your hands are tired. So if you put the work in, do the planning, make sure you're charging the right price to begin with, it enables you to just do that last 10% to just go over top for every one of your customers and develop a really good reputation. So those are some of the kind of the schools of thought behind why build a company budget and what it helps you do and all of that. So basically what I'm going to do is I'm just going to skim down through this calculator. I already have it pre-populated with kind of like a typical 4 to 5 employee landscape, hardscape contractor business numbers. I'm building a mock budget here. So what I would recommend that you do is if you have QuickBooks, pull out a profit and loss statement from last year, have it here beside you on the table, and you can reference it when we're looking for numbers to plug into this budgeting tool for your company. So I have a mock budget. Make sure that you get your numbers for your real company. And if you don't have any of these numbers, do some due diligence to do some educated guessing or estimating as to what this number will be for your company, and start tracking so that next year when you build your second budget, you do have the data to have educated numbers to be plugging into your budget. But you got to start somewhere. So if you don't have anything at all, we'll do the best we can talking through each field. If you do have numbers, that makes it super easy. You just look off of that and plug that in. And one more thing I'll mention before we start diving in is underneath each one of these fields, there's a little link to calculate this for me. And what that helps me do is, let's say that, for instance, in labor, let's say I have no idea what I'm going to spend in labor this year. We have calculators behind each one of these fields that you can click on, open up, go through them, fill them out, and it'll say, hey, based on the employees you said you have and the hours they work, you have $209,000 of field labor expenses, etc. So anyway, okay, let's dive in. So first thing I need to do is define my season start date and end date so we can determine how many production days we have per season. So if you're in the northern part of the country, you're going to have a shorter season. If you're in the southern part of the country, you're going to have a longer season. We just need to determine how many production days you have in your business so that we can make sure that we're charging overhead correctly, the overhead markup. So I have that populated through the middle of March through the end of November, and we work 5 days a week. Once I have that populated, I'm going to go down here to the sales goal. So in the sales goal, I'm essentially going to say, hey, what did I sell last year? And let's say my P&L here is $550,000 of revenue that I generated last year. And let's say I want to do some pretty significant growth. I'm going to hire a guy. I'm going to increase my prices, whatever. And I'm just going to expect to increase my sales to $675,000 this year. So I'm going to plug that number in. And it's basically just a number that I want to put in there as to what I want to sell for the upcoming year. The next field is total field labor costs. I'm going to spend a little bit more time on this one. So field labor costs, the reason its name's field labor is because we want to make sure that we are not including any overhead staff in these numbers. So if you have an office admin, or if you're an owner that splits 50% of your time from the field to 50% in the office, you only want to put 50%, or the appropriate percentage ratio, into the field labor portion. So if I make $100,000 as an owner, I want to only put $50,000 into the field labor. So essentially what we're doing here is we're determining, what did I spend in payroll, benefits, taxes, etc., on my field labor staff, the people that I employ that are involved in producing billable work for my company. And let's say for a moment that last year I spent $185,000, but I'm going to give raises, and I'm going to pay a higher rate, but we're going to work less hours or something to that effect. And I'm just going to put in this field what I expect or budget to spend on field labor this year. And I'm often looking off of what I spent last year. If you don't have that data, do some math, and this little calculator in this calculate this for me link will help you figure out a good estimate as to what you'll spend on labor in this year. When you fill that out, now we want to scroll down here to the next field where it says total field labor hours, and it's essentially saying, hey, in that $209,000, how many hours are your staff working? And you want to count their hours regardless whether they're hourly or salary. Even if they're on a salary, we still want to hey, how many hours are you roughly working per year? A little hint, usually a full-time employee that works 50 weeks out of the year works about 2,000 hours if they work 40 hours a week. So anyway, I'm going to plug in, let's say last year I had 6,700 hours. Let's say I'm going to hire a part-time guy through the crunch part-time of the season, and I'm going to plug in 7,050 hours total collectively across all of my staff in my company. And then once I've determined that number, the total unbillable hours, what that is like how many of those hours that I'm paying my field staff is unbillable. So like if I go and fix a rut in the yard that we made, or if we broke something and I'm sending a guy out to fix it on my own dime, how many of those hours am I paying my staff each year? And in my case, I was tracking it in this mock budget with our app for syncedup.com. We have a mobile app for time tracking, which tracks unbillable hours like that. So that makes it really easy to come up with this unbillable number. If you weren't tracking that in any way, first, I encourage you start tracking. Start now. Start this year. Start this upcoming year. Make sure you track your unbillable hours so that you have this data, because this is really, really critical that you know this. And if you don't have any information at all, or you don't have the slightest idea, I'd suggest a rate of somewhere between 5 and 8% as an industry average of what percent of hours that you pay on payroll are unbillable. So moving on to material costs. Basically what material costs are is essentially, when I sell a job, I need to buy stone materials, joint sand, edge restraint. I need to buy all of those things to do my jobs. And what did I spend? What will I spend in the upcoming year on materials to do $675,000 worth of sales? And so the easy way to do this is look back at my P&L and say, hey, how much did I spend on materials last year? Okay, well, I'm also increasing my sales goal by whatever it is, 15%. So if I spent if I spent $150,000 last year, I need to up that by the same percentage, because if I sell more work, I'm also going to need to require more materials, and I'm going to spend more money on materials. So in this example, I'm just going to plug in $195,000 as my budget for my material costs this upcoming year. Now, equipment. I'm going to spend a little more time on this one as well. Labor and equipment are two that I want to make sure that we get very clear on, to make sure that we're not making any mistakes on it, that I don't leave any details out. Because this equipment one, there's essentially two schools of thought with how to handle equipment in your company budget. One is you cover the cost of owning that equipment by billing out for it per hour or per day, billable by the unit. That's what that means. The other school of thought is I'm just going to recover my equipment expenses as a line item in my overhead, which we'll cover in one of the next cells here in this company budget. So I personally am a fan of recovering my equipment as overhead. Here's why. Here's my way of thinking on it is, if I recover my cost of owning my equipment by the hour, by the day as a fee, first I have to remember to add it to every single proposal that I send out that I use that equipment on. And often when I'm trying to bring the price down on a proposal because I want to try to send it out, that's often the first place that I'll start like robbing from it. I can get that done in 3 days instead of 5. And so what happens if you do that too many times, you get to the end of the year and you did not recover enough of dollars. Owning the piece of equipment costs you more than what you recovered for it when you build out for it in your estimates. That's one thing. Two is if it's in my overhead, I don't even have to think about it. It's just automatically baked into my overhead markup, and I can just like plug in my labor and my materials, my subcontractors, and I don't even have to add my equipment as another line item in every proposal, which makes it super easy, and it also prevents me from making that mistake of not judging enough of time for it. And the best thing I like about it is whether I'm planting a shrub with a shovel or whether I'm actually digging a ditch or digging out for a patio with that excavator, I'm getting my cost of owning that machine covered if it's in my overhead, because the overhead markup on that labor for running a shovel when the machine's parked back at the shop is generating the dollars for me to own that machine without me losing money on it. So that's kind of my school of thought around my way of thinking around how to recover equipment. But essentially what you can do is you can click on this calculate this for me link in the billable by the unit equipments field, and you can basically add in every single piece of equipment that you have in your company. And so you can do it, this calculator will allow you to record your equipment in 2 places. One in overhead, so here's all the overhead equipment items, or hourly or daily, so by the unit. So in this example, I don't have any of my equipment in my hourly or daily section because I'm not recovering the cost of owning my equipment in that way. I have it all in my overhead, so I own all my equipment. I'm recovering all in my overhead. So essentially what I'm doing is I'm just adding each piece of equipment that I own, and for each piece of equipment, I'm just going to click on this Unilift model, and for each piece of equipment, I'm going to determine how many of those that I own. I'm going to plug in my purchase price, and I'm remembering to account for inflation, interest, and the reason inflation is because, like, hey, let's say you own it already. The number I need to plug in here is what am I going to need to spend to replace this equipment when the one I have now is worn out and I need to replace it. Maybe when I bought it 5 years ago, it was $23,000, but with inflation and I'm probably going to do a small loan or something or whatever, I'm going to fudge factor and budget for worst case scenario. So I'm going to, even though the sticker price on a Unilift Mini is $25,000, I'm going to budget in $27,000 just in case by the time I buy another one, the price has gone up some. So I'm budgeting for worst case scenario. Then the next thing I'm doing is I am determining how many years I'm going to own this piece of equipment before I replace it. So in this example, I'm saying, hey, I think I can get 8 years out of it before I need to buy another one to replace it or upgrade. And then lastly, I'm entering my selling price or the value when I'm done with it, when I'm getting rid of it. So let's say, hey, I've had it for 8 years. I need to put that back in. So let's say I've had it for 8 years, and now I am going to sell it, and I'm going to buy my other one at the $27,000. What is it worth when I'm selling it at the end of those 8 years? So again, I'm going to budget for worst case scenario. Not like, yeah, I've been seeing guys getting them for 12 grand. I'm like, no, I'm just going to budget it as if I want to move it and sell it and get rid of it. Like budget for worst case scenario in both this purchase price and selling price valuation. Essentially, when I'm done, I just hit save, and what the calculator is doing is it's doing the math to take my purchase price minus my selling price divided by the years used to come up with an annual cost to own that machine. So even though it cost me $27,000 to buy that machine, per year, broken out over 8 years, it's costing me $2,750 to own that machine. And then in this example, because it's an overhead, it's adding all of that up and it's putting that dollar amount per year in my annual overhead budget, which I'm going to hit next. So when I hit finish and return to the budgeting calculator, it's going to upload that and take me back to the budgeting calculator where I'll continue on to the next cell. So with subcontractors, if you're using a subcontractor, maybe you have a subcontract like a power washer that you bring in after you're done doing every job to clean up after yourself. If you're using subcontractors for any reason, just put in the dollar amount that you spend with them on an annual basis, total, across all subcontractors that you hire. In this case, I don't use any, I'm just going to leave that as 0. So now, lastly, I'm just going to cover overhead. And if you did a good job with your QuickBooks, you can look back at your P&L and say, hey, I spent $150 last year in overhead. This year I'm going to budget for $173, prices are going up, etc. I do encourage you to also use this calculate this for me link, because essentially what it does is the equipment and trucks recovered in overhead is automatically populated in here for you when you fill out that calculator we just came from. but you can essentially go down through here, and this calculator is designed to jog your memory of like, oh yeah, I forgot we do spend money on uniforms. I need to put that into my budget. But essentially, we need to plug in here every single cost that I have to be in business. So my marketing, my advertising, my fuel, my equipment, my trucks. Do I do any sponsorships for the local Little League team or something? My office admin, my owner's salary for when I'm not in the field producing billable work. Do I have a business coach? Like literally everything needs to be accounted for. And essentially when I'm done, I can just, same thing, hit finish and return to the budgeting calculator, and it'll populate the budgeting calculator with that value. So now that the whole thing is filled out, I can come down here to the overhead markup percentage per class field in this square, and I can see that. Here's where I choose where I want to recover my overhead. I can choose whether I want to recover my overhead on labor, materials, equipment, subcontractors, etc. I encourage and recommend doing most, if not all, of your overhead recovery on labor, because labor is your most precious commodity. It's also, it's what sets you apart, your skill, your craft. And it also represents a specific span of time. Like I have to recover my overhead in this season, in this span of time, and labor represents that span of time because it's tied to hours. But you can essentially say like, hey, I do sometimes like a 20% markup on materials and then leave the rest on labor. So any value you type in any of these fields, the calculator will automatically assign the rest of it to labor down here. But I'm just gonna leave it all on labor in my example here. You can do whatever you want. I don't like to recover any overhead on equipment and subcontractors just because like it's unpredictable how much I'll spend on subcontractors often and that kind of thing. So I'm just gonna, I do recommend sticking to materials or labors. But anyway, now that all of the fields are populated, I'm gonna come up here to the top, I'm gonna check out this pie graph. This is always the fun part, like, hey, 31% of my company budget is in labor, 29% is materials, and I often see labor materials kind of be 30-30, right? And then overhead is in the 20s usually, and then my net profit is at 12. So gross profit would be the dollar amount of net profit and overhead expenses put together. And net profit is after overhead expenses have been deducted from this number. So it's just fun to review this, check out, hey, I have 186 production days in a year based on my season. My net profit margin is at just over 12%. If this net profit margin is less than 10%, we got to fix it. We can't leave it at less than 10%. There's just not enough of margin in there to be safe. It's not healthy. Anything over 10% I consider to be healthy. Anything less than 10% is not. So if it is less than 10% for you after you've filled all this out, we got two choices. We can either increase sales and figure out how we can increase those sales, or we can decrease expenses somewhere. So whether that means maybe not buying that piece of equipment this year, or whether that means I'm gonna increase my sales goal by a couple more percent to bring my net profit to that 10% mark or better. It'll also show me, this is really valuable for a lot of guys because we always wonder, well, what should I be charging per man hour? This tells you, based on your budget with your numbers and your overhead burden, you should be charging in this mock budget $60.24 per man hour. That 12% of net profit is going to generate $81,000 of net profit. That is after my owner, that's after me as the owner is paid, that's after all of my staff, my overhead is paid, my shop rent, everything. It's after totally every bill is paid, and this is the money that's left in the bank that I could use to reinvest in the business, hire new people, or take as an owner's draw, whatever it is you want to do with it. These numbers down here across the right are pretty cool. It lets you kind of see budget insights, like where your overhead's recovered, where your profit's generated, your portion of total sales. It also lets you see like your production outlook, like, hey, how much overhead do I need to recover per day, week, or month, or how many billable hours do I need per day, week, or month? It also lets me see the man-hour price breakdown, like my cost, my overhead recovery per hour, my profit generated per hour, which equals my customer's facing price. And I can plug in a value here and say like, hey, if I have a $125 material item that I'm selling on a job, what would my customer pay? So if my cost is $125, I'm not doing any overhead recovery, profit's 17, my customer's prices on that item is $142. So now that you've built your budget, we can actually go build an estimate that's price for profit. And we've developed another calculator called the job estimator for that. So somewhere around this video, there'll be a link where you can click to go and open up the estimating calculator where we can go price a job with your budget numbers. Once you've filled out this budget calculator, now we have the numbers that we need in the estimating calculator to go build yourself an actual estimate for a real job, take your costs, mark up your overhead correctly to your company budget and your profit, and it'll essentially tell you what you need to charge the customer to cover your costs and your overhead and generate the profit that you'd like to generate in your business. So thanks for watching. We'll see you in the next video.